Jasmine, I'll give it back to you.
Thanks, Miguel. So before hearing from our faculty today and considering that this is our first meeting as a group, I wanted to provide a brief overview of the clean energy tax credits to level set all of us and our knowledge and orient us as a group. Many of you have demonstrated very strong familiarity, so this could be like older news for you, and others it might be a little new. And before we begin, I wanted to share that this presentation and the broader workshop is not meant to serve as official tax advice. Ultimately, you'll want to lean on your organization's legal counsel for decision making. So let's go ahead and dive in. Um, so in August of 2022, as some of you might be familiar with, federal legislation, the Inflation Reduction Act, dramatically expanded clean energy tax credits. Many of these incentives were created by previous legislation, but the IRA both increased the credit values and extended their shelf life into the early 2030s. And these are tax credits that give you resources for clean energy generation and storage projects. I know some of you all have that. Some of you all have electrified your commercial use EVs. And some of you have also installed EV chargers. So uh, these are just a few examples of the tax credits and some of the projects that these credits support. And what's unique about these tax credits this time around is that they don't only benefit entities with tax liability. The legislation created a pathway known as direct pay or elective pay. These are used interchangeably that help tax exempt entities such as yourselves recoup the tax credit as a cash payment from the IRS. Um, this benefit applies to 12 climate and clean energy credits, including the ones from the previous screen. Um, and there are some stipulations with this benefit, including that you must own the energy property that is claiming the tax credit. Um, and on this last point here, um, organizations, sorry, organizations must place their project in service before claiming the direct pay. On this last point, organizations planning projects might not have enough money in the bank to pay for the project and wait for that direct payment to come back. So in those instances, that's when you can speak to a green bank or a community development finance institution to explore financing options and explore something like a bridge loan. Um, we won't be diving into that too much today, but we can definitely follow up with you if you're interested in learning more about that. Um, and so direct pay is a newer process for many organizations. Until this tax mechanism was created, many teams weren't necessarily set up to claim this benefit, and its process is also very unique. But despite it requiring a bit of knowledge and some document wrangling and coordination among your colleagues, it is so worth it for the cash. Direct pay doesn't require a competitive application where you just hope that you get the money that you request. There are no caps, meaning that you could buy EVs, install multiple solar PV systems, invest in clean energy systems year over year, and still qualify for direct pay for all of these investments. And unlike grants where you need to report on progress, direct pay does not require extended reporting. So it's guaranteed if you're eligible. You can stack it with other incentives with some minor caveats to that. And you can go after direct pay for this past year's investments and this year's completed projects. And finally, I wanted to address some specific questions that came up during our needs assessment meetings that I felt like that I felt would benefit the entire group. So first, I wanted to share this special note that there are some things that could impact the amount of credit that you're eligible for. So if you use tax exempt municipal bonds, you'll have a slight haircut in the eligible tax credit value because you're already benefiting from a tax-free bond. Um, in the restricted funding case, let's say you get $100,000 from a donor to specifically install a solar PV system that cost you $100,000, and you're eligible for up to 30% of a tax credit or $30,000. This is considered an excess benefit rule, where the government's not going to help you make a profit off your system. So for those of you who are using some restricted funding, that's just a special note for you all and a quick lesson to the group. Second, be aware of your eligible costs that you can claim direct pay for and what may not be eligible. So to give you some examples of what's eligible, your energy property, your equipment, the cost of your labor are examples of eligible costs. Whereas if you hired a consultant to scope out your project, that may not count. So being extra clear on some of the statute and the guidance that's been sent out will be key there. Next, I wanted to talk through and clarify deadlines. So direct pay filings are due 4.5 months after your fiscal year ends or your filing year ends. So if your fiscal year ends December 31st, that means you have a deadline of May 15th. And if you need to get an extension, there's a form that you can fill out that gives you an additional 6 months. So if you have a May 15th deadline and you request an extension, that pushes you out to November 15th. And last thing here is maintain good records. The IRS can audit up to 5 years after the project's completed. So make a good practice of keeping your documents, consolidating them to prevent headaches down the road, either for yourself or for employees that don't exist yet at your organizations. Okay, and wanted to recap the investment tax credit and the clean electricity investment tax credit. The investment tax credit, ITC, or 48, it's the tax credit number. This applies to projects completed by December 31st, 2024. And then the clean electricity ITC kicks in at the start of this year. So the way that these two are different, the 48E, the clean electricity ITC, is tech neutral, meaning that electricity generating technologies are eligible so long as they achieve net zero greenhouse gas emissions. I also wanted to provide a reminder that applications are still open for the low income communities bonus credit. These are additional credit values that you can add on top of what you're eligible for at your base amount. So there are 4 categories for this bonus credit. And you have to apply for them. It's a competitive application process. And these are projects that are located in low-income communities. Per government language, they're located on Indian land. The third category is this project might be affiliated with the qualified low-income residential building project. And the fourth category, this could be a qualified low-income economic benefit project. So we'll be having one-on-ones later, and I'd love to be able to touch base with folks who might be interested and might already know that they're located in these census tracts. And then the last thing here is for projects that began for the investment tax credit and clean electricity ITC in particular, for projects that began construction in 2024 or later and are larger than 1 megawatt, failure to meet the domestic content requirement may result in a reduction in your tax credit value unless an exception applies. If you have more questions about that, we can dive into it later. And then finally, there was some confusion about the alternative fuel vehicle refueling property tax credit. So I thought I would recap here. This tax credit, again, is for property that stores or dispenses clean burning fuel or charges EVs at your facility. So the most important thing to note is this credit is dependent on geographical location. To be eligible, the property must be located in a rural or low-income census tract. And this is mostly due to the need to build out this type of infrastructure in underserved areas. So the link on this slide, which will be circulated after this workshop, will direct you to a map tool where you can plug in let's say your EV charger's coordinates and determine its census tract eligibility. And then lastly, for the maximum value of 30% for this tax credit in particular, an organization must meet prevailing wage and apprenticeship requirements, which essentially refers to the pay that your contractors receive and the number of hours that early career professionals or apprentices have with the firm that you contract. Okay, and if you'll have additional questions on what we just reviewed, happy to dive in later. I do want to make space for Kathy as she's our next presenter. And hi, Kathy, good to see you. I see that you've come on. Um, so I'll quickly introduce Kathy and I'll pass the mic over to her. So Kathy, again, is the director of the Office of Energy and Climate Change in Dane County. And she has almost 30 years of experience helping businesses and residents adopt sustainable practices. And prior to joining Dane County, Kathy led Cool Choices, where she worked with local governments and private businesses on sustainability efforts for about 10 years. And this is the second cohort. Actually, both of our faculty, this is their second cohort where they're supporting our participants. And today she's going to share her experience registering for elective pay and walk us through how Dane County has benefited from this tax incentive. So Kathy, take it away.
Thanks so much, Jasmine. It's great to be here. And as Jasmine said, I'm going to walk you through this sort of registration process because it sounds really daunting, but I want to kind of demystify it a little bit. Am I in charge of the slides, or is someone next slide?
I'm in charge and I'll flip for you.
Next slide. So I'm going to mostly talk to you about the filings we did last year in 2024 for 2023 projects. And so this discussion reflects the work that we did at Dane County filing for electric vehicle credits last year, but also a number of municipalities in Dane County did filings, including a number of relatively small municipalities. So I share these population estimates because I want you to see that cities and villages like 10 to 12,000 are filing and getting these funds. I want this to feel really accessible to you. So that's sort of my aim, to demystify this and make it feel more accessible. Next slide. Jasmine sort of alluded to this. There's, if you're going to do the filing, there are a number of steps here. So first you need an ID.me account, which is the account that you interact with the IRS about. Probably there are people in your organization who already have ID.me accounts. And then you go into, on the IRS webpage, the spot where you set up an elective pay account. And essentially you log in via an ID.me account, and then you create an organizational account for your organization. Once you've got an organizational account, you can register your specific projects, whether those are EV charging stations you've installed, EVs you've purchased, solar arrays you've installed. Each of those things is a project. You submit all of your projects to the IRS. They review. Faye was just talking about there's some nerve-wracking time there in the review. I'll talk about that a little bit. But ultimately, they send you back registration numbers, or in some cases, tell you they need some more information. And then you use those registration numbers to file the tax credits. Okay, so that's the big process. Next slide. Here's sort of a visual of that process, if you'd rather think about this in visual terms. So you first have that ID.me account, then all the registration steps, then you get the numbers, then you do the 990T filing. Next slide. Part of the registration is attestation. So during the process of registering, you're essentially saying, you or whoever is filing this, that This is accurate information. The only technical review that happens of your project is during the registration phase. So in theory, Treasury is working with the Department of Energy to look at these files that are included. Jason might have more to say about how real that DOE role in that is, but in theory, this is the technical review. And so you're saying here, this is all true. The point of the registration, Treasury has said to me, is to kind of catch any errors and correct them before you actually make a tax filing, because if you make an incorrect tax filing, there are bigger stakes around that. So think of the registration process as sort of the pre-test with, and in my experience, pretty helpful IRS folks who are willing to like help you get through this. They want you to have a successful filing. So the registration is sort of getting all of your ducks in a row so that you can claim that credit. Next slide. So part of the other thing that will happen in the registration is this is where you upload all the supporting documents that are sort of the evidence of your project. So when you do your 990 filing, there's no, like, you're not including there any receipts from vehicles you bought or solar arrays, but in the documents that you submit with the registration, once you describe the project, you have this opportunity to upload documents. So, for example, if you were claiming that you purchased electric vehicles, you need to at least include one of these documents, a title, a sales document, or vehicle registration. You have to upload something that proves that you bought a vehicle. If you're doing a solar array or batteries or geothermal, it's a little bit more complicated. You have to prove you own it, that you built it, that it's running. You know, there's a couple of pieces there. Next slide, Jasmine, shows you. So this is what that actually, so one of the amazing things that with our local partners we were able to do is take some of these screenshots of the registration system. So this is our friends in McFarland, Village of McFarland's documents that they submitted for their geothermal system. So a permit, a certification, and evidence of ownership documents. The thing to say about this is the IRS really does not want a, 8 mega document that's like everything that ever happened with your project. There are file limit sizes here, and they're really encouraging you to submit something that is concise and to the point of what they want you to be submitting. Next slide. So I've gone through the registration process twice now, and I think a thing I would say is that there are a lot of improvements in the system in 2025 from 2024. Still, of course, you're going to want all of your documents in one place before you start this. There's some IRS like information online that's a little bit helpful. One of the things we found, and again, I didn't see this as often in 25 as I saw in 24, but sometimes the system can be a little janky. And so you hit submit and you get an error. And if you hit submit again, it will work just fine. It's just a little, it's this is a big system that the IRS built to do a lot of things. And at some moments it just catches itself a little bit. The other tip about the registrations that's really important is when you submit your registrations to the IRS, that file is locked and it's put in a queue. And if you have to unsubmit it to change something, you lose your place in that queue. So you don't want to like submit it and then go, oh yeah, we forgot about that other solar project, because then you're going to have to come back out of the line and do it again. You really want to make sure, and this can be, I mean, for us at Dane County, this was a big deal. We thought we had all of the EVs we purchased on a list, but it turned out, oh, that department bought an EV too, and nobody remembered that, and it wasn't on our list. And, making sure you've got all of those pieces before you start. Next slide. This is just a fun tip. So in the system, it will want the if you're doing like solar or geothermal, it will want the latitude and longitude of your project. And I did not know until I was doing this that on Google Maps you can right click on a location and it gives you the latitude and longitude. That reduced the panic for us. Go ahead, go to the next one. You were right on track, Jasmine. Um, and hit ahead one more. So thanks. That as I said, the elective pay system has become friendlier over time. So now when you go into it, one of the headings is elective pay, which is pretty cool because it was not a heading last year. Last year it was only in the fine print that that was there. And there's a button in the system up there, the thing in the upper right is a way to securely send an email to the IRS from inside the system to say, hey, I have a question about this. And in my experience, I was getting responses to that within a couple of days, typically. You know, the response rate from the IRS has been really quite good on that. Next slide. So as you're going through this process of registration, the system tracks what you're doing. And, you know, when you get to the end and hit submit, it tells you we received your application. Next slide, which means you're in the place that Faye talked about being in, where you're waiting. So one of the really important things is you can sign up. You are not automatically signed up for email alerts. You have to sign up to get email alerts telling you that something changed in your record. The other thing I found is that like the email alerts must generate once a week or something. So it would be like something happens in the record, but it might be a week later that you get an email alert that says something happened. So, you know, a couple of weeks after I submit, I have it on my calendar to once a week just go in and check my file because I want to know what's going on and I don't want to wait longer than I have to, kind of thing. Um, Typically, it's been our experience that first response from the IRS is usually within 30 to 60 days. Jason again might have that that's getting later. We experienced that again this year. The IRS talks about up to 120 days, but they say that that's if there has to be back and forth with you about something. And again, then the 990 filing is due you know, May 15th for that January to December fiscal year. Next slide. So if you're successful, you get a thing like this that says the review is complete and you submitted and, you know, you had 3 facilities and they're all there. If you hit one more, you will see my first version of this was this. I got action needed. So I'd submitted 7 vehicles for registration and there was an issue with some of them. You know, it says, please refer to the comments. If you go to the next slide. So I submitted PDFs, I think sales documents for all 7 of these vehicles. And in 3 cases, they said they couldn't read the PDF. My lesson learned was this year I submitted sales documents and vehicle registrations or titles, so they had more than one thing to read. So it was like, oh, rookie mistake. I only gave them one document to read, and if they had trouble reading it, they were like, nope, do that over. So in this case, I had to resubmit those 3 to get all of them registered. Next slide. Which takes you to filing the 990T. And, you know, for those of us in local governments or nonprofits who don't have to do a 990 normally, this feels overwhelming because that's a huge document. But if you read this section, which plant parts to complete, hit the thing once more, Jasmine. Hit this is just popping up that yellow highlight, that yellow highlighted text. And so if you are only filing the 990T to get your elective payment, there are just 4 sections that you have to fill out in the 990T. This was a super powerful message for our finance people to hear that that I wasn't saying we had to fill out like all the sections of this 990T, that there were just these certain parts that we needed to fill out. If you go to the next slide, this is from Lawyers for Good Government, and we really like this visual they have of sort of how the forms fit together. So you have a Form 990T that is sort of if you will, the executive summary that says, hey, IRS, we want you to give us this money. The Form 3800 details which tax credits you are claiming, and then there are separate forms for each of those tax credits and sometimes attachments. So this is set up as an EV example. There's an EV form, and then there's a Schedule A that you have to fill out for every single EV. So if you had 10 EVs, you would have 10 Schedule A's, one 8936, one 3800, and one 990T would be your filing. And the next slide here is just an example of a page of that 3800, where you can see there are all of these tax credits. The IRS did not create new forms for the elective pay. We're using the same forms that businesses use. So there's like all of these credits, that many of which do not apply to us, but they're buried in the list as like line AA is the EV credit line, where you put in the summary for the EV credit. That's a lot. So who does all of this? So in our experience, there are sort of two groups of folks internal to your organization that have to be involved. Somebody on the sustainability or facilities side, and somebody on the finance side, because somebody on the finance side has that organizational profile information, the bank information, that kind of stuff that's needed. And that sustainability or facilities person is going to have the project details and the cost information. In theory, you can file this all yourself via snail mail. We did that in 2023. Most of our local partners did that in 2023. What we learned is that the IRS vastly prefers e-filings, and now there are more opportunities to e-file. If you paper file, it's much slower to resolution, and it's much harder to track the status of your project at the IRS. So last year we paper filed ourselves. This year we are using an electronic filing service. We're actually working with Jason at Giraffe Financial to do the 990 filing as an e-filing so that it's easier. Services like that will also do the registration for you. I kind of think it's important to know how this all works before you start procuring services, because you know what level of effort you need. Next slide. In the course of doing this, though, I want to talk about, part of what I love about this RMI program is you're a cohort, and you suddenly know other people who are going through the same process you're going through to fill this stuff out. We essentially had this little cohort here in Dane County of people who were doing filings. We even had some meetings where we compared forms to make sure we were all filling out the same stuff. There have been historically, and we'll see if these continue into the future, the IRS has had elective pay office hours where they will take questions from the crowd and work through things. Lawyers for Good Government also has annotated versions of the 990T forms on their website, which is like a helpful, these are the pieces I should be filling out. And the other place that you should assume you're going to get some technical help is from the design teams on your clean energy projects. So one of the projects I'm going to show you a photo from in a moment is the Village of Oregon did a library with geothermal and solar. And the librarian was essentially the facilities person for that project in the Village of Oregon. The librarian cannot tell you what expenses on her GC's invoices are for the geothermal system. When she was struggling with that, I said, call your design team and tell them they have to help you. And initially her design team said to me, but Kathy, we can't offer tax advice. I said, I'm not telling you to offer her tax advice. I'm telling you to translate the invoice for her so that she understands what's the geothermal system versus what's the lighting. She's a librarian. This is not her thing. And they were like, that's totally valid. We can totally do that. We will help her. And they helped her sort through that invoice and made it easy for her to have those pieces. Next slide. There's also this super helpful, this is the world's longest email that I've ever had. Real people respond to this email when you send things to IRS elective pay or transfer of credit at IRS.gov. Real people respond. They often respond within a day or so. At one point, I sent them a question, and an IRS agent, like 15 minutes later, called me, and he was just like, yeah, what you were asking was kind of complicated. I thought it would be better if we just talked through it. And I'm like, holy cow, what universe is this? Um, it just, I really can't overestimate how helpful they've been to us in this process and really patient answering all of these questions. Next slide. So there are successes. The checks have been slow to flow from the first year. This is all new stuff. I feel like the IRS is being super careful that they're making triple checking everything before they send out checks. But one of our school districts got a 70K check for a solar array, and that Village of Oregon, oops, can you go back a second? Did the with the geothermal, got a check for $489,000. This is the village of less than 12,000 people, got a check for $489,000. In total, across the county, there were more than $2 million coming back in checks for 2023 projects. Next slide. So where this takes us, so for us at the county, I probably spent about 8 hours doing the filing the first year where we got $60,000. I'm a county worker. My time is, that's a pretty good rate of return for 8 hours of my time at the county. For the Village of Oregon, they did use a filing service, so they paid a fee, but they got $489,000 back. And the Jasmine made this point. So when that check comes to the Village of Oregon, there are no restrictions. There is no further reporting required. This is a check to them of unrestricted federal funds that they can use to do whatever they want to do in their village. It's like super powerful. This is so much better than any grant funding any of us have ever accessed. I mean, I just can't overemphasize how amazing this money is as a resource coming back to our local governments. And we do believe that, and certainly as we're a number of us are doing filings for 2024 now, this gets easier each time we do it. We're smarter about which information to collect. We're just moving through the process a little faster, and those funds are incredibly valuable. So with that, if you hit one more, Jasmine, you can do this. Like, I'm super excited to each time have this cohort of new people who are going to also take advantage of this program.
Running. Jason's the founder, uh, yeah, founder and CEO of Giraffe Financial, which is an end-to-end online tax preparation solution designed to help organizations navigate the complexities of tax credits. And in addition to his role at Giraffe Financial, he also is an adjunct faculty member at Columbia, and I mentioned this earlier, but is a former team member from RMI. So excited to have you, Jason, and all of your expertise with this process. So take it away.
Yeah, well, I'll first just say thank you, Jasmine, Miguel, for hosting this. I'm always honored to be on sessions with Kathy. So also, Kathy, it's always a tough act to follow, but it's good to see you. And really, it's a pleasure to meet everyone. I spent, like Jasmine mentioned, 6 years at RMI. Before doing the nonprofit work at RMI, I'd come from the energy finance space. So I'd worked in structured finance, specifically around tax credits and how to finance projects with tax credits at Solar City and Tesla. And so I kind of have that background where I'd done a lot of that work, didn't really want to be a banker, went to RMI, spent a bunch of time there, really focused on different regulations. And then when I saw the opportunity of the Inflation Reduction Act, I decided to be trying something entrepreneurial. And I recognized that there was this big problem. I'd had actually an experience uniquely working at RMI where we helped rural electric cooperatives across Texas build solar and storage. And I came across this issue with how they can take advantage of tax credits. They're not taxpayers. It was this whole challenge. So I really experienced it firsthand. And with the Inflation Reduction Act, I thought, okay, let me try to help more organizations solve this problem. So we have the name Giraffe, the letters IRA for the Inflation Reduction Act are right in our name. And truly it's our entire focus. So the whole business, we have 8 people now, are dedicated to helping really any organization take advantage of these incentives. And if I can give you one, my high level takeaway for this is that you're all in very good company. And I think again, Kathy really put it to you really well. Like you have the support of RMI, you have the support of each other, and certainly faculty like Kathy and I. And so this is achievable. You can do it. Our business is we make it easy. Like our whole thing is how do we streamline this and not make each, the librarians of the world have to become tax experts, so to speak, in navigating this process. And so that's what we do as a service. What I want to offer you today is if you're going to go do it yourself, like we encourage that. And I'm going to try to leverage all the experience that we have so that you can kind of learn from the tips and tricks. And Kathy went through a lot of these. I'll try to build on some of the stuff that she already said. And then at the end, I'll just explain to you what it is like. If you wanted to say, hey, I don't, I get that there's money out there. I don't really want to become the expert. I'd rather just outsource to someone else. I'll share a little bit of what the process looks like to work with Giraffe. So with that, our whole thesis is that you deserve the dollars that you qualify for. And we don't want the complexity to impede that. And so our job, at Giraffe is to make sure you get that money. To date, we've supported over 50 organizations that take advantage of direct pay. I think the number is like hundreds of projects if you start counting, all the different actual electric vehicles, let's say, that we filed for. And at this point, it's well over $10 million of credits that we've monetized. So we've done this a fair bit. And I'm really excited today to share some of our learnings for you to build on what Kathy said, to really try to empower you all to make sure you take advantage of this. And the first piece I want to start with is kind of the pre-filing, which is really ultimately where you're entering the IRS and going through their hoops. And Kathy described the ID.me process. One thing that's come up for us is the need to ensure redundancy. And so what I mean by that is the ID.me is an individual account. So like someone on the team of the organization claiming the credits, they need to use their social security number. And, Kathy showed the screen where like that individual is going to need to attest that, they're doing this accurately. And sometimes people leave organizations. And so we've had multiple occasions now where the person who used their ID.me account and they were the only one who accessed their account, had left the organization. And then there was this issue where no one can get back into it. We have to do a backdoor through the IRS, which takes a long time. So the real thing that I'm encouraging on the ID.me account is when you create an account, provide some redundancy by adding someone else from your organization to that account. Just make sure that there's multiple people who can access it if need be. Something else that has come up that's been a little tricky with pre-filing registration accounts is the entity structure. So it could be very simple. You have a company or you have a nonprofit and it's just you. Sometimes they're more complicated for nonprofits, for sometimes faith-based organizations. There's a little bit more convoluted structure where you really need to understand the org chart and which entities are disregarded from federal tax purposes and which ones actually accrue the credits. So that's one thing. If you're in a situation where you're part of a parent organization or you have child organizations or sister organizations that might be consolidated, really making sure that you're claiming the credits at the level of the EIN that the tax, from a federal tax perspective, flow up to. The point about uploading documents is something that Kathy already covered. Less is more. I can just share, if this helps, an anecdote that someone at the IRS, pre-filing team, that their staff member said to me. They said, think about it like a monkey is going to be reviewing these papers. Kathy said, don't upload a huge document. You really want them to be able to tick the box, so to speak. So for a vehicle, they'll want to see, like Kathy mentioned, a title for the vehicle that has all the details about that vehicle and ownership. Don't provide a whole lot more. They just want to see, I need a title. Okay, here's a title. Check the box. If it's a solar project or a geothermal project, those can be a lot more complicated. They don't want to see all the details. You really just need to tick the boxes that they're looking for, like the screen that Kathy showed you. And then I'll also just plus one on the messaging portal. That's a new thing that they introduced. So you have two options for how to reach out to the IRS. The first is through this portal. So once you've signed into the portal, there's an option for you to hit the secure messaging portal. Um, there's also sending that email. And yeah, Laura, thank you so much. It's a great question. It's actually relevant for solar and frankly for any other project. The question was, can you submit pre-filing registrations before the system is placed in service? And unfortunately, the answer for that is no. You really do need to wait until the systems are placed in service. And then at that time, you go and submit your pre-filing registration. So these are just a few little tips and tricks for pre-filing to build on some of the knowledge that Kathy imparted. It's certainly manageable. Like the IRS has a user guide for it. I think that user guide is 75 pages for no good reason. It's relatively intuitive if you can take the time to go through it. But sometimes there are little snafus along the way with entity structure and the ID.me. If we go to the next slide, please. I'll try to get through this stuff pretty quickly, and then I want to make sure there's time for Q&A. So in terms of filing, again, Kathy spoke to this. Paper versus electronic, we certainly encourage electronic filing. Um, certain organizations are required to electronically file, and others were kind of waived the right to do paper filing for the last November's filing period. But going forward, we really do encourage you to electronically file for all the reasons that Kathy mentioned. You can track it, you have a record of it, and they're going to just get through it much quicker. We talk to people all the time who are still waiting their money. The good news is we've also seen a number of instances where people are getting checks with interest. So, we weren't really sure what was going to happen. The IRS had said that they would be paying interest if they take more than 45 days to remit the elective pay payment. And that's 45 days from the filing deadline that you have. So it's kind of a silver lining. People are waiting longer, but maybe they'll get a little bit of interest. We're not really seeing it applied perfectly uniformly, and there's a little bit of uncertainty with how that's actually working. But it's a little bit of a good news. If you're sitting waiting for money and you're frustrated about the timeline, at least maybe there'll be some extra for you. And we do encourage, and this kind of goes to the earlier question about if things are in limbo, we really encourage being proactive. The honest truth is you have to project manage the whole process with the IRS because there's so many things that they're doing. And as everyone's aware, like their staff, has unfortunately been haircut recently. Up to 20% of the IRS staff have been let go. So there's just not that many people there. You really need to kind of stay on the ball and push things forward. And so there's one form that we usually get power of attorney from our clients and then just handle the IRS on their behalf. So they don't have to go and hound the IRS. But if you want to, you can yourself. And there's a form called Form 4442, which is the taxpayer inquiry referrals form. And if you're not seeing any, you've submitted your file, you've submitted your tax return and you're not hearing anything, it's worth doing that. You can kind of get an update from them that way. So the next slide, please. So the one thing that I really want to emphasize, and this is kind of where I think from a value proposition standpoint, we come into this, is the compliance piece. Now there's a real varying degree of complexity depending on what kind of projects you're working on. If it's just electric vehicles, the compliance is pretty straightforward. If you have an electric vehicle and you have the title, you're going to get that credit. Calculating the credit can be a little bit tricky if it's medium and heavy duty, but it's more straightforward on things like solar or energy storage, or also like we've talked about, electric vehicle charging infrastructure that has that prevailing wage and apprenticeship compliance requirement. And so the real thing that Giraffes is focused on is making sure that you have peace of mind, right? Like when you submit these tax credits, you file them to the IRS, and the expectation is they're going to pay you. But there is this tail end period for certain credits. And I'm going to say specifically for things like solar, Section 48 credit, the tech neutral credit. So it's solar, energy storage, geothermal, whatever it might be. The IRS can come and knock on your door for up to 5 years and say, hey, we're actually taking a little bit more of a fine-tooth comb through this claim. We sent you this money. Now we want to audit it and make sure that you actually claimed the right amount of money. And what's really important essentially is that you avoid triggering the recapture and penalties, because what the IRS could do is, let's say they sent you $100,000. If they came to recapture it, they would say, okay, we're going to take the $100,000 and we're also going to charge you some penalties. So there is like a little bit of risk here that you want to mitigate by doing a really good job with record keeping. And also making sure that you abide by all the rules. So I'll just flag for things like solar, geothermal, energy storage. You do not want to sell the projects. You cannot have a change of ownership. So that's really important for the whole 5 years. That would trigger a recapture, where if the IRS were to ever audit you, they would say, okay, we're going to take all this back and charge you penalties. You can't change ownership. You need to make sure that the projects remain operational. So that has to do with making sure you have a good operations and maintenance contracts, and your asset management is active. Same thing for stuff like charging. You want to make sure that those chargers continue to work. And then the other thing that's really important is, in the event of an IRS audit, you want to have records, right? The argument is, hey, the IRS didn't think you did it right, but here's all your paperwork that proves why you did it right. And then you're going to have to kind of go back and forth with the IRS in that audit. And so we really encourage you to have robust documentation. It's stuff that the IRS doesn't necessarily collect, right? We've talked about on the pre-filing registration. You don't need to submit everything. You just want to submit like less is more. But that doesn't mean that you don't want to keep that stuff for yourself. For yourself, you want to make sure you have all of the documentation possible. And then the last thing that I would say for compliance, and Kathy touched on this just at the end too, is that there's a important interplay between grants and tax credits. So depending on how your projects are funded, you really want to make sure that you're understanding what the no excess benefit rules are and ensuring that you're calculating credits accurately. One thing that's been really fun for us is we get to tell people often that they actually get more credit than they thought. So we'll talk to them and they'll say, oh, we actually only are taking a 30% credit on the out-of-pocket expenses we had because we had a grant. And we'll say, okay, wait, let us actually look at the grant documents. Can we understand if it was a restricted grant, it was an unrestricted grant? Maybe we can include that in your tax basis and you can actually take 30% off a much bigger number. So that's a really important nuance that, again, we've seen time and time again, people are having a hard time with the calculations. So that's it for like tips and tricks. I would just shift real quickly, if I could, to, again, our whole offering is we just do this all. It's complicated. It's not impossible. Kathy's an amazing kind of champion of this and has done that. And I think all of you as being part of this, like, you're clearly demonstrating that you have the willpower and the interest in getting to become for your organization, the in-house direct pay expert. Our offer is really just, if you want to kind of outsource that, we're here to help and we would do everything for you. That's the whole focus of our business, is everything from determining eligibility. For things like vehicles, it's pretty easy. For things like geothermal, it's a little bit trickier, and other tech neutral credits. Calculating your credit, like I said, the interplay between different grants, making sure that you get the maximum value for your credits. One thing that we do, and you can kind of think of us like a CPA firm. I personally am not a CPA, but we have CPAs on our team. And what they're doing is what's called cost segregation analysis, which is essentially making sure that all of the costs associated with the project can be included in your tax basis. So if you take 30% of the cost of a project, what was that 30% of? Is your cost of the project $100 or $120? We try to get that cost as high as possible. We'll do the compliance in terms of all the paperwork. We'll do the pre-filing registration. We'll use our ID.me accounts. We'll prepare the tax forms. We'll do the electronic filing, and we'll do the record keeping. So we're available if you want us as kind of a easy button, so to speak, for that. And if I could, I'll take just literally 1 minute and I can just show kind of our website. We're actually releasing an update to the website next week. So it'll look a little bit nicer than what it looks like right now. But I'll just show really quickly the Giraffe website. So this is what it's going to look like next week once we get it launched. We talk about being the easy button for monetizing credits. We have a little bit of detail about, you basically come here and just say, like, what credits do you want? You would hit direct pay, whatever your credits are, if it's vehicles, if it's charging infrastructure. And then we kind of put the name, organization, email, password there. You create an account, as simple as that. And then we just collect some information for you. So we've really tracked everything that the IRS needs. We kind of call it like the TurboTax. It's like, instead of having to go figure out the IRS forms yourself, you use TurboTax and it tries to intermediate. So that's what we would do. you would come on our website, you'd set up a profile here with your account, and then you type in your credit submissions. So, we would ask your title, organization names, things like this. And then on the flip side, you would submit your credit applications. So 30C, 45W, 48. We just guide you through the conditional logic. So you basically know exactly what credits you are eligible for and what you're getting. And, this is our process. You place the project in service, come on our website, submit a credit application, and then that's really all you have to do. Giraffe will review your submission. We'll get in touch with all the contractors, figure out who needs to give us information, collect the information from them, do all the compliance. We'll pre-file for you, we'll e-file for you, and then you just sit back and get paid. So that's our value proposition. Even if you don't want to use Giraffe services, I'm still available as a faculty member to just be helpful in supporting you doing your own thing. And I'm sorry that was more long-winded than I wanted it to be. Let me pause there and save at least 5 minutes at the end, please.